Well, they're back. Hey, I just, have to bring it up because it's an amazing trend that I've been seeing over the last few weeks, pretty much across the country with the loan officers that I work with. And I believe that it's not the first time that this has happened. I think, I have witnessed this situation happen before, not to the degree that I'm seeing it now, and certainly not with the market movement that we've had. But I posed the question when I say they're back. Remember those pre-approvals that you did, and those clients, they went out looking at houses and either didn't like what they had an opportunity to buy, didn't agree with the price, couldn't find what was 100% perfect, uh, or basically just said, well, I read somewhere that home prices were going to fall, or even had emotional attachments to interest rates and said things. And again, I brought this up a couple of years ago when I sent out those green bumper stickers that said rates not 4% yet, and big question mark. And then I sent out the patches with those bumper stickers that said 5%, 6%, 7%, 8%, 9%. And some people criticize that thought process, saying that, oh, rates are going to go back to 2, they're going to go back to 3. This is temporary. And your customers saw that written online, said online, shared with even other mortgage professionals and real estate people who said, housing prices are not going to continue to rise, and interest rates were going to go down. And they freaked out, and that's reason I had the bumper sticker, rates not 4% yet, because all those people who wanted to get something in the 2s had to start taking rates in the 3s and just started to say, well, I'm going to wait till they go back in the 2s. This is temporary. Well, we looked at this stuff, and they expected that the situations were going to change. And over the last few years, the reality of it is rates have continued higher. Inventory of available homes, remains pretty consistently low compared to averages, although, transactions are taking place. But the quote unquote experts on social media keep saying that, rates and home prices are going to fall. Well, guess what? What we're seeing right now, and what we're seeing in the past few weeks more specifically, is that people are looking around and starting to realize that that's been a bunch of nonsense. Because when you think about it, those people who balked at paying 4% interest rates on a house back then, they were thinking that the ones that closed at 4% were pretty smart when rates hit 5. And the people who balked at 5, waiting for them to go back to 4 or 3, well, the ones that accepted 5 and bought their house are living in their house, and they've got a 5% mortgage rate, and they're looking pretty smart right about now. And the same thing holds true with those people who had 6 and they made decisions. Oh, I'm not going to take a 6% rate. I'm going to wait for rates to go lower. That's what I've seen on the internet. That's what people have told me. Rates are going to go lower. Home prices are going to go lower, with really nothing to base that in fact or likelihood. In fact, those people who got those 6% rates, looking right now, they're pretty happy that they took those 6% rates. And it begs the question, and the question that we need to keep bringing up to the people that we serve, which is why we talk to our pre-approvals on a weekly basis, asking them if they're looking and having those conversations about what it is, because what's the cost of waiting? How long can people continue to wait? With home prices still rising, and depending upon what market you're in, which is most markets in this country, home prices are still rising. And obviously interest rates are rising. And looking at the historical data, and again, I'm not looking at a crystal ball, but I'm just saying, historically speaking, the 30-year fixed rate loan has ranged anywhere, again, in a low of 2.5% to a high of 18.5%. That's just a fact. That's what's happened. The average over the time since they've been keeping records is about 7.75. So if that's what's average, we have to look at this. Now, I'm not saying here, and I don't believe we're going back anywhere near 18.5%, but I also don't believe we're going to 2.5. And while I would prefer certainly that we had lower rates, in general, it's always nice to pay less for what you're doing. But let's ask the question: what makes you think things are going to get any better? What's happened over the last 2 or 3 years that leads you to believe that somehow with something magical is going to happen, and we're going to watch interest rates go from 8.76 5.43? What makes you think that's going to happen? Interest rates always rise faster than they go down. We know this. That's just a fact. Interest rates go higher faster. And it's taken 2.5 years, 3 years to get from where we were to where we are now. If you look at the Federal Reserve, and we talked about this last week, go back and look at the blog post. We look at the Fed dot plot chart. Again, these are supposed to be the 19 smartest financial people in the country. That's why they got the job on the Federal Reserve Board, supposedly. And they're not predicting that, the Fed funds rate is going to go lower. So what in the world makes you think if the Fed funds rate is somewhere between 5 and 6%, that 30-year fixed rate mortgage loans are going to go to 5 or 6%? Historically, that's just not been the case. Historically, that's not what happens. And so the possibility that these things are there, and again, I'll be the first one to admit, and I said so last week, the Federal Reserve dot plot chart is almost laughable in its ability to be wrong. But if rates do go lower, refinancing is always an option. You can't refinance a loan that you don't have. If rates don't, and you can't refinance a loan if rates don't go lower. So are you going to be the person who wasn't happy at 4 and was thrilled when rates got to 5? Are you going to be the person that wasn't happy at 5 and was thrilled when rates went to 6? Were you the person that bought at 6 when rates went to 7? Are you going to be that person, or are you going to be the thousands and thousands and thousands of pre-approved borrowers who pulled themselves out of the marketplace because somewhere on social media, some expert told them, don't worry about it, rates are going to go lower and housing prices are going to go lower? And while I myself do not, I am surprised at how quickly rates have deteriorated in the last 6 to 8 months. It's, it's one of the things that I've railed about on the blog post is guys, the Fed is looking at data, and I don't know why they look at it, historically inaccurate data that has to be readjusted and recalculated. The jobs report, classic example. They found out, took 2 years to find out they miscalculated job numbers by 300,000. I mean, just a little miss, 300,000. Not, okay. We can rail upon that, but the facts are what the facts are. That's what they look at. That's the people who are in power. Those are the people making those choices. And when they themselves believe that they have no impetus to lower the short-term interest rates, the Fed funds rate, the thing that everything else gets based upon, historically, what makes you think that that's not going to happen? That, what are you pointing to that says, hey, rates are going to go lower? And if you buy today at 7 or 8% interest, whatever it is that you can get, depending upon your circumstances, if that dramatic change does happen, you can refinance. You could go lower. But the one thing that remains constant is you still own your house. The price of that house doesn't go any higher once you've bought it. The price, you own it. That value is yours to keep. Any improvement in prices is yours to keep. And the good part is you've taken a 30-year loan, and that payment's going to be what that payment's going to be, regardless of what happens in the market, unless you want to change it. And those are the conversations you need to be having. And that's why we stay connected to our pre-approvals. And that's why we got to talk to people in person. We got to pick up the phone. We got to call these people. We got to talk to them. We got to share with them what's going on, because the reality of it is, unless you can see something, unless you can point to something, unless you can, and please share with me, look at whatever data that has led you to believe that housing prices are going to fall dramatically, and so are interest rates. Please share it with me, because I'd love to see it. I'd love to discuss it with you. And if you have it, it's real easy to do. It's Mike at imtcoaching.com. I'd love to be able to look at it. We'd love to be able to discuss it. But until next week, get out there, do your job, make the calls, speak to the people, share the opportunity, because there are people buying houses every day right now. They're making those choices. And if circumstances change down the road, they'll have the ability either to benefit from the choice they made today or to change it. As always, Mike, imtcoaching.com. We'll talk to you again next week. Take care.